What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Twitter Incorporated, ticker symbol TWTR. On today's video, we will be going over the recently released results from Twitter's quarter, and they are fantastic from a revenue growth perspective and from an income from operation perspective. This company is firing on all cylinders. In fact, they produced their fastest revenue growth in basically 7 years. This company is absolutely on fire. Speaking of fire, this stock chart is starting to look like fire to me, and in a good way. This thing is broken up into a key technical level. When we go over the stock chart, I'll talk about the two scenarios that I see could potentially happen to Twitter really over the next few weeks or so. This stock could really move, in my opinion, and we'll talk about why from a technical perspective as well when we get over to Twitter. Now, it's important for someone like me to really pay attention to Twitter, and I think some of you out there might be in the same boat as you. Maybe you don't own any shares of Twitter. I personally don't, but I like to analyze this company because guess what I do own? I own Google and I own Facebook. So you better believe if Twitter has its fastest revenue growth in nearly 7 years, I'm not going to say that Google and Facebook are going to do the same thing, but they're probably going to have absolutely blowout type earnings here in the next couple of days when they report, because if Twitter is doing it, you better believe the market leaders are doing that as well. Now, if you look above all the social media stocks out there, what is above it? Yes, I see a black cloud, and those black clouds are filled with politicians from both sides of the aisle. We're not picking sides here, but a Senate bill looks to strip social media protections for health misinformation. And so basically what the Senate wants to do, and this is actually led by a Democrat, believe it or not, Amy Klobuchar, who I think was a presidential nominee on that side of the aisle. She's looking to start a bill that basically says in a nutshell that if misinformation is shared on Twitter, on Google, on Facebook, on Snapchat, and that misinformation is disseminated, well, then companies like Twitter, like Alphabet, like Facebook, like Pinterest, those types of companies can actually be held liable for that information. We'll see where this Senate bills go. It makes me a little concerned, though, as somebody that just thinks, look, I don't like misinformation, but one of the way misinformation gets turned into fact or gets turned into finding the truth is by people sharing that information and then people finding sources that counter that point. And if all of a sudden sites like Twitter and Pinterest and Facebook are all of a sudden the judge and jury on information, I think we find less truth when it comes to things like this instead of more truth. Although I wouldn't say that Washington is full of truths themselves. Now, moving on to the statement of operations over at Twitter. We've got our revenue here on the top line. We got our 3 months ended here. On the right-hand column is last year on a quarterly basis. Left-hand column is this year on a quarterly basis. And we've got our 6-month view on the right-hand column. Take a look at this revenue growth, folks. We went from $683 million worth of revenue last year all the way up to $1.2 billion. Hello, that's absolutely fantastic revenue growth. I don't care what kind of company you are, that is absolutely fantastic. Now, what also has ticked up over the last year, we've got cost of revenue ticking up. We got research and development basically flat. Sales and marketing ticked up a little bit as well. General administrative went down a little bit. That gets us to total cost and expenses really in line. Okay, that's up, what, $200 million? That's not bad. When you grow your top line this much, to only grow your total costs and expenditures by just a couple $100 million, that is fantastic. You better believe that is going to print a fantastic income from operation number. Last year, we lost $273 million. This is one of the reasons why I wasn't really a big fan. I don't own Twitter shares, is they just hadn't turned the corner from profitability perspective. When you look at Google, when you look at Facebook, those companies are growing nearly as fast as this company. In fact, most of the time, they were growing faster than Twitter, and they were wildly profitable. Twitter just wasn't there yet for some reason. Like, they just were burning too much money on the expense side. Well, they have turned the corner. Maybe they earned $30 million in the most recent quarter. You see, for the last 6 months, they've earned about $80 million when they burned through about $281 million in the previous period. All things being considered, That's looking pretty darn good over at Twitter. Okay, let's take a look at the cash flows as well. We pulled down this net income number. This is for 3 months ended here, over 20 over 21. We get to add back things, which I don't agree with. I don't agree with adding back things like stock-based compensation because, look, you're going to have to pay your employees one way or another. None of them are going to work for free. So you get to add that number back in. That skews this really high. Look at these cash flows over at Twitter. 380 million versus 200 million. $700 million worth of cash flow for 6 months versus $450 million worth of cash flows over the last 6 months. So that's why I'm showing you this, not to hate on Twitter. This is just the way they're allowed to do it from an accounting perspective. I would just educate yourself a little bit when you have this massive amount of stock-based compensation that you can add back into your cash flows. It just dilutes this whole thing. Now, cash flows, still some value here. We do get to see down here repurchase of common stock. Twitter's executing a buyback. They think their shares are undervalued. They bought back over $333 million worth of stock over the last 6 months. They've done about $500 million worth of stock buybacks as well. Now, I did skip over the balance sheet. As you can imagine, it's absolutely crystal clean. Okay, yes, they do have some convertible senior notes, things of that nature sitting on the liability side, but it's not a whole lot, and you've got a lot of cash sitting up here. So this is a company that can do a lot from a cash perspective. One of the reasons why it might confuse people, well, why is Twitter buying back stock? Why aren't they reinvesting in the business? Well, part of it is Washington, D.C. Okay, these senators are really tough on these companies, and they're not going to allow Twitter to consolidate the industry by buying other social media networks and things like that. So they can't use this cash like other businesses might, because the government's just not going to allow these social networks to get even bigger. These senators think they already have too much power from an information standpoint, from a lot of standpoints, and this is both sides of the aisle. This is not a conservative or a liberal speaking here. This is both sides of the aisle think these platforms have too much power, so they're going to do things like buy back stock, and that is beneficial to you, the shareholder. Now, what is also beneficial to you, the shareholder, is this stock has just broken a key level in my opinion. Now, broadly, I had this thing zoomed out, and I probably shouldn't have zoomed it in so quickly. Broadly, this stock has been in an uptrend. Okay, you could draw this line, you could extend it back here, however you want to draw this uptrend. The stock is in an uptrend, okay? But what you're looking for is kind of breakouts to the upside, and that's exactly what we saw here. We saw here this level right at about we'll call it about $72 per share, just to keep the numbers kind of round. This was an area of support here. It kind of jumped up above. Once we broke down above it, we really broke down, but then we came right back up to $72, got rejected, came back down, came all the way back up to 72. So when you see this from a technical perspective, it's an area where sellers have stepped in at $72 per share. What you want to see, obviously, if you want Twitter stock to go higher, you need the sellers to dry up and go away. Okay, you need the sellers to go away here at 72. And what has happened in the after hours? We're actually up here at about $73 per share. So we'll see something like this potentially tomorrow with with Twitter. So we'll see Twitter stock put a candle up above this $72 level. And notice the last time we did this stock actually got all the way up here to about we'll call that about $81 per share. That's still significant upside. That's still $7, $8, $9 worth of upside in this one. So here's two things that I see here with Twitter. When you put this candle up here, now the disciplined trader wants to see a candle tomorrow and then a follow-on candle. They want to see another candle that's actually just slightly above that. That is showing you that the sellers have dried up, the buyers have taken over, and the odds of us going from about where the stock is right now, $73, $74, all the way back to retest. Because remember, the sellers have dried up, okay? And the buyers have taken over. So the odds of the probability and the odds of this stock, look, it's not guaranteed. Nothing is guaranteed in the stock market, but the odds and the probability start going into your favor when you start seeing this from a technical perspective, that we get all the way back up to $80, $81 per share on this one. And so here's a couple trade setups that you can have. You can come in here and buy tomorrow or on Monday or something right in the $73, $74 range. I'd put a stop loss right under, probably right at $71 per share, because it would be, sometimes this is a fake out, just like we saw back here, okay? The stock got above 71, rallied up to 80, and then came all the way back down, okay? And so I'd have my stop loss set in this one right at about $71 per share. You could probably bump it up a little bit higher than that. So we're talking about like $2 in downside, and we're talking, you know, $7, $8 in upside in this one. So pretty, actually really good risk reward in my opinion on this one. Now, the other thing that can happen is that the sellers just end up taking over up here. The buyers dry up. They're like, I don't want to really buy up here close to all-time highs. The sellers take over and we get rejected. In my opinion, you could come back down here and retest this trend line down here, depending on how fast and how quickly the stock comes down. That could be in the 63, 64, 65, $66 range on that one. But in that case, even if we come back down there with Twitter, the longer term trend on this stock is still up. And so really, this stock is actually looking pretty darn bullish in my opinion. Now, in my opinion, I'd much rather own a Facebook or a Google for the long term. But from a trading perspective, I don't really mind any of these setups that we're seeing here with Twitter. So hopefully guys enjoyed this video. We'll be back again with more soon, including the aforementioned Google and Facebook in the coming days ahead when they report earnings here shortly. Hopefully guys have a great day out there. Good luck with your investments.